All right. We have the agendas in front of you. So our full point of meeting today is to review the 2025 financial audit, and we have our audit team here from Bonadio Group, Ashley and Greg, to present the report. So Ashley and Greg, welcome, and take us through it.
Thanks for the opportunity to work with the agency. You know, we're happy to be here. First year, this went way smoother than most first year audits usually go. So we're happy about that.
This is the first year you.
Yes. Yep, definitely. So everything went well. We'll start off in your packet. You should have one that says significant audit matters on the front page there. Probably, oh, not that one. Yeah, it's like a 2-pager.
The monthly, a little bit well.
Did we save them off of that?
Near the back.
Okay, yes, that's it right there. Should be separate, right?
It was finalized. Oh, okay.
Yep, that one right there. Yep.
Okay.
We're gonna start with the easy ones. Put it that way. So this is our required communications letter. Basically, as we walk through this, it's sort of the scorecard of what happened during the audit before we get into the actual financial statements. So starting with the qualitative aspects of the accounting practices, we did implement GASB 104 this year, which was the disclosure of certain capital assets. And really, all that means is in your footnote related to capital assets, which we'll look at shortly, we broke out the assets held for sale, which is what GASB 104 tells us to do. Technically, we didn't have to implement it till next year, but given the nature of your business, we thought it was, you know, important enough that we should put it in this year just to have that transparency out there. So that was really the only change in terms of accounting principles for the year. Again, as I mentioned, there were no difficulties encountered in performing the audit. All the information was provided when we asked for it, and in good quality shape. No corrected or uncorrected misstatements, meaning the information that you received during the year is the information that appeared in these financial statements, which is, again, exactly where you want to be. Had we come in and made a whole bunch of journal entries, you have to start thinking to yourself, all right, what did I look at all year? These numbers are completely different. So again, we're in a good place there. On to the next page. No disagreements with management, at least that I'm aware of. Everything went well. We didn't argue about accounting principles or anything like that, or the treatment of transactions. And then under other matters, we always like to point out, and we're going to point it out a couple times, you have required supplemental information in there, the management discussion analysis. It's basically, there's some good information in there, especially about the program aspects of the agency. However, we look at it and we make sure all the numbers tie out, but we don't audit it or give an opinion on it. So I'm required to let you know that. Okay, so that's it for the required communications. You should have another single page there, which is the report on section 2925 of the New York State Public Authorities Law. So this is a real easy one. We're required to look at your investments. You have no investments. So that's what we did. We looked and made sure you didn't have any investments. Had you had any investments, there are investment guidelines put out by the public authorities that limit what you can invest in. So we don't have to worry about that. But going forward, if you choose to invest in things, it's generally limited to things like treasury bills or money market funds.
So
So
don't forget investing in land or that thing.
no, this is truly just straight up financial investments.
Yeah, so like last year, the IDA had CD investments that were held last year, and then during this year they matured, and now at the end of the year, there wasn't any.
Which would have been, again, an allowable investment per public authorities law. Okay, so now we'll get into the big packet, the financial statements as of 12/31/2025. And we'll go right to page 1, which is the independent auditors report. I'm gonna jump to page 2 kind of really quickly before I come back to page 1. This doesn't make sense to me the way we set this up, but we're limited to what they tell us to do. So we'll start with your responsibility for the financial statements. Your responsibility are these numbers, and that's part of what we're here to do is have you approve the draft of these numbers. Your responsibility is also the internal controls related to these numbers. So I like to point that out because although we produce these financial statements, they're really yours. So our responsibility is to give an opinion on those financial statements. And as part of giving that opinion, we list a bunch of bullets there, but I always like to point out a couple key ones here before I get to that opinion. We do a risk-based audit. So we come in and we look and we say, what's going on? Are there particular transactions that are risky? Did you have turnover in personnel? Things like that go into the risk assessment, which affect the audit plan. So that's how the audit goes. Back to internal controls, we obtain an understanding of those controls, but we don't give an opinion on those controls. So if we find that they're not designed properly or operating as designed, we will write a finding and tell you about that control and the possibility that that could lead to a material misstatement. And not to give anything away, but we didn't have any internal control findings. So let's go back to page 1. What you guys engaged us for, and that's to give an opinion on those financial statements in that first paragraph. So we believe the financial statements are presented fairly in all material respects. So this is the highest level of assurance that we can give you, meaning everything that we looked at was presented in accordance with generally accepted accounting principles. We had no issues with it. Again, had we come in and you booked a transaction that we don't think was proper, and you stood your ground and said, we think this is right and we think it's wrong, we'd have a different opinion. So again, we don't have that, going on here. This is exactly where we want it to be. Okay, so now we will jump ahead. We'll jump right over that MD&A, which I pointed out is some great information, but it's unaudited. And Ashley's going to walk you through some of the numbers for the year.
All right, so we kind of already started talking about it a little bit with the certificates of deposit no longer sitting on your statement of net position for 2025 versus 2024. And that was actually one of the things that caused the overall increase in cash from last year. And other factors that went into that included receiving grant funding that was due to the IDA, along with the administrative fee receivables that were on last year's statement of net position. We talk a little bit more about the long-term one in our financial statement disclosures, which we'll get to in a little bit. Another thing that we briefly touched on was the implementation of GASB 104. As you can see on the statement of net position, nothing with capital assets presentation is changed. Once we go to the footnote showing the capital assets activity, I can talk about that a little more. But overall, there was an increase in capital assets from the prior year due to a property sale to Eagle Drive Holdings. And there's actually already 2 more sales that took place this year, which we'll get to also in the footnotes. Other than that, there was an overall increase in that position from the prior year, which we'll look more into on the next page. So here we have the statements of revenues, expenses, and change in that position. In other words, your income statement for 2025 and 2024. As I mentioned, there was a big land sale this year, and you can see there was a gain on the sale of that land versus the prior year loss, which was related to the grant program involving the pump station project to Cayuga County Soil and Water. So that's a big change.
What amounted to the loss?
So how the project was recorded from a bookkeeping standpoint is that the construction in progress asset, that we would call it, went into the IDA's books, and then at the end of each year, technically the property is owned by Soil and Water, so it would just wash right out, resulting in what looks like a huge loss on the financial statements due to the required presentation standards. But
Water and sewer.
water, yes, I keep doing that, I apologize.
No, that's not, we do it too.
So that was particularly turning the sewer line over to the water and sewer.
Yeah, we paid for it and then you gave it away.
Yes.
Yeah.
Thanks.
Okay,
That's how you lose money.
that's right.
And then looking at the operating expenses, nothing unusual there year over year, just regular increases in costs and expenses, nothing out of the ordinary. In terms of non-operating income and expense, you did have an increase in interest income from the prior year, mainly relating to interest income earned on those certificates of deposit that were held during the year, which, like I said, ended up with a nice increase in that position from the prior year of about 1.5 million.
I had two questions on that page.
Yeah.
If they make any sense, we had an increase in investments of $1,560,000.
And what page is that?
I'm on page 5, statement of cash flows. It says investing activities.
Oh, I gotcha. So that's on the next page.
Oh, I'm sorry, I'm on the wrong page.
You're going a little bit ahead of me, but
I'm sorry.
totally fine. I can go to that question right away because that's pretty much done anyways with the income statement. So what that $1.56 million is saying is that you had a net cash inflow from investing activities. That's not limited to just your basic investments of investing in the CDs and earning interest income. That includes other things that we wouldn't consider part of general operations of the IDA, but they're also financial transactions that took place. So that would include, as I said, that interest income, the dollar proceeds from the sale of land during the year, along with other smaller income sources such as land rent and the gas well royalty received by the IDA.
And I think my question, the 2 previous years, we had a negative 200,000 and a negative 143,000. What led to the huge increase?
The biggest factor would be the land sale. And then in those prior 2 years, you'll see a line that says, at least this year on our statements, it says capitalized land cost. It could have been called something the same, if not slightly similar. And that negative amount factors in activity from that loss that you saw on the income statement side of things.
That 200, I would bet that 200 and that 143 was the sewer line.
And you put some water line in too, with that in there.
Oh, yeah.
I'll bet that's gotta be in there too, Genesee Street.
Oh, that had nothing to do with the IDA.
That was the water.
That's the water and sewer.
Gotcha.
But I think the 343 was probably
143, or you're adding the 2 of them?
the two of them. I think that was probably sewer line,
Okay.
because we didn't buy any land.
Yeah, makes sense.
No,
It was also
Yeah.
the purchase of those CDs last year too, was about almost 500,000. Again, was converted to cash this year, so it was a negative cash last year. positive cash this year, so just a kind of a change in your asset.
I'm not recognizing your heading is what I think.
Yeah,
Best,
yeah.
I'm just not.
Right.
No, that's totally understandable, and
Yeah.
there's always a language barrier when it comes to accounting versus general operations. So if we say a word, it might mean something totally different to you guys, so we'd love to answer any questions, like I said, that you have. But did that answer your question?
Yes,
Okay. So looking at the statement of cash flow, still looking up at the operating activity section, one of the most notable changes was cash received from admin fees. So there was a significant increase in fees from last year. There was about 820,000 in revenue, along with the collection of those prior year receivable amounts that I mentioned earlier. And then other than that, that was also a net inflow of cash from operating activities of about 1.6 million, which ended up to a net increase in cash of about $3.2 million from last year.
Yeah, they do a lot of projects.
And as promised, we can move on.
oh, I'm not through it.
No, go ahead.
Yeah.
Don't let me stop you.
The first item under changes in financial categories, we had an increase in net position of an increase of 400%.
I think we're in there again.
I'm going,
He's on D5, where the first comment.
I'm going too far ahead.
No, you're right there.
Yep.
Yes, and most of that is, as I've mentioned, the result of the property sale this year. That was one of the biggest sources of that increase versus prior years.
If I'm no accountant, you understand. If you have a total change in net position, that land that you held was a value to you. How can you use the total revenue from it as a change in that position?
So,
If you sell something,
Swatching from one bucket to another bucket, right?
yeah, so the proceeds, so what the change in net position is representing is the proceeds you received from the property sale. So the dollars less what we would call net book value of the property that was held. So that would include whatever cost was put into the
But that-
asset.
Book value must have been grossly
Lower.
understated.
Had to be,
Well, so it's the cost basis, which is what it was worth when you bought it.
gotcha.
Or increased cost basis.
Yeah.
so we never
That make it
increased the
even better.
value of it as we did a valuation of it and increased the value. It was
Not
never
that.
increased on our books.
Yes, it was
That,
based on.
that
what
makes
you paid
sense
for
to me.
And that's, again, per governmental accounting standards, they don't really let you do a revaluation of those type of assets.
Why in the world? would that be?
I don't know.
That's
I can't
awfully
explain.
bad business practice.
It kind of is. I think in some ways, it's meant to give governments a little bit of relief, because otherwise you'd be doing that every year. So it is a costly, process to revalue land and property on an annual basis.
I can see that, but if we actually did the revaluation, why would that have not shown up in a?
So again, the government accounting principles are saying you need to value those type of assets at historical cost. So it's not really even giving us an option to do that.
Well, it'd be the same as if you ran a hardware. Your current inventory on the shelf is cost basis. You don't readjust them every year.
Right.
But if you sell it, you show that gain. It'd be the same.
No, you can do it either way.
Right,
You gotta file the loss. So
Right.
That's how it,
right.
but at least it explains the big delta.
Absolutely.
Right.
My last question on that page, I bothered you. What What led into our total expenses increase of $38,000 or 17% increase in total expenses?
So the increase, I can go back to that page. One of the main causes of the increase related to an increase in contract services expenses, which is mainly, if not entirely, the administrative services provided by MRB Group for the year.
And this is Tracy, this is the first year we had MRB expenses. I thought it
No,
was
we
from the
did.
year before.
You did, but it wasn't for the full year.
Oh,
So I think we started in March of 2024,
yeah.
No, later, May.
May 2024, so it's really only a half year that you're.
I was sorry, we didn't have anybody for a week or two.
It was the first full year.
Okay, I'm through with that page.
Yeah, no, you're totally fine. So I was pretty much wrapped up with the statements of cash flows, and now we can go on to the notes to the basic financial statements. I don't want to go through every single footnote with you guys, as exciting as that would be. There are a
We'll
few,
see.
there are a few that I would like to highlight. So the first one would be on page 12. And once you get to page 12, we'll be looking at the very top under the cash disclosure, under the summary of significant accounting policies. So a part of our requirements as auditors is to look at the cash balances at year end, whether you have bank accounts, checking accounts, saving accounts, CDs, and ensure that, or check whether or not it's fully collateralized. So as you guys know, if you open a bank account at one of the, it feels like 20 banks on Grand Ave, you have up to $250,000 in what's called FDIC coverage. And we factor that into the accounts, as well as if the IDA has any additional collateral protecting the money beyond that $250,000. And we can say for both years 2025 and 2024 that all cash balances were collateralized, which is good news, but it's not something everyone sits and thinks about every day, but it is a requirement on our financial statements. So after that, I would like to go to disclosure number 4 on page 14. This is where we'll look at the capital assets.
With the FDA thing, what do you suggest? Should we put the money in 20 banks or just?
No, nothing
Alright.
is wrong. The only thing you would be concerned about is if we said there was a dollar amount that was under collateralized, which would mean it's not protected or insured in any way.
All of our accounts were insured properly.
Correct.
Yes, and we do receive monthly letters from CLMB of our third party.
That's what you're saying.
Yeah.
All right,
Can you explain the collateralized part? Because there is a difference between FDIC, that limit, and beyond that. I mean, is there a risk if all the money's sitting in one institution?
Not necessarily, as long as whatever institution you're holding it at,
But,
make sure that it's collateralized.
but it's a good point, because we actually moved our money out of one bank because we were a little concerned with the risk on it. Where were we, Michael?
Well, there was,
Generation.
yeah, there were 2 reasons
Mhm.
why. Is one, there were better rates available through Cayuga Lake National Bank at the time, and 2, since they're now owned by a credit union, we're barred from doing work with credit unions. So when our CD matured in May of last year, we moved all those monies over to the money market account we have with Cayuga Lake.
That was a big reason why it was moved.
Yes.
Yes.
Okay, so on page 14, as I mentioned, that's where the capital assets disclosure begins. And really the big change from, I say big, but it's quite literally 4 or 5 words that have been added to the footnote. So as Greg mentioned, we are required under GASB 104 to present if capital assets are being held for sale. And all that requires is for us to add a little sentence under the table showing your capital assets and just saying included in this total, which at December 31st, 2025 was land and a gas well that were held for sale. And we also disclosed the historical cost of said assets, and that's it. And we did the same thing for 2024 in accordance with that requirement. And as we previously discussed earlier, there was a land sale during the year. That's why you see a deduction of about 187,000 this year, and that was the costs related to that asset that was sold. And then in 2024, you see that even bigger deduction due to that pump station project that we discussed earlier. All right, and then after that, the next page, I would like to bring to your attention to disclosure number 7, which is called the reclassifications disclosure. And pretty much all that this is saying is that certain amounts on the 2024 financial statements that were previously audited by Danable and McKee, some of our, the way we set up our financial statements, either the name of the line might be different or a dollar amount that we didn't think fit right in one category was moved to another. So that might cause questions, but if you guys have any questions, if you look at both of the statements in front of you, we're more than happy to answer those questions.
If you look at page number 6, that 1,400,000 item, that is the sewer line that was under construction. Is this construction in progress?
And what did you say the dollar amount was?
1,398,343. I said 1,000,004.
Right, yeah, that was the CIP at the end of 2023, which was then disposed of in 2024, which caused that loss in 2024.
That was the sewer line, right?
Yeah, I believe so.
The pump station project, so any costs that were included in there.
So that's where the loss comes from. It was capitalized and then disposed of the next year, and I'm assuming there weren't proceeds related to it.
Yep, and then the last thing I just wanted to bring up, I actually didn't print out an updated copy for myself, so if I could borrow yours, correct? So our last requirement with producing the financial statements and conducting our audit is disclosing any subsequent events between year end and the date that we issue the financial statements. So after doing some researching of our own, inquiring with Michael and Tracy, we found out that there were 2 property sales in 2026. So on February 26th, the board approved a sale of property for a purchase price of $84,000. And then earlier this month, on March 2nd, the agency executed a sale agreement for land held for sale for a purchase price of $90,000.
So this audit is also part of 2026 as well as 2027.
Well, not necessarily. So as the auditors were obligated to look at subsequent events to see if there's something significant that either one could be misstating what we presented for 2025, or it's something significant enough that is worth disclosing to a financial statement reader that we may think the financial statement user may benefit from knowing.
You've included that in your 2025 audit. How do you deal with it in the 2026?
No, it'll be included in our 2026 audit.
Also.
It's not in the numbers.
Right.
It's just a.
Right.
It's just a note that when they audited,
Okay.
they saw that.
Yeah, like essentially what it's doing is giving the financial statement reader a better idea of what is going on as of through the date of the issuance of the financial statements. And it also kind of gives you an idea of how things are looking in 2026, which is a good thing. But yeah, that was the last piece that I had. Does anyone have any? Yeah,
Of
go,
course.
absolutely.
On page 8, in pilot payments payable, it went from 167,000 to 19,000.
Yes,
How in the world could pilot payments payable change from 1 year to another?
oh, that's accounts payable. The line under pilot payment, but that also had a decrease.
Oh, I'm on the wrong thing, see this one. Okay. Accounts payable.
You got buried collecting money.
So that was just a timing issue at year end of what you owed at year end.
Yeah, that's why we typically don't spend a lot of time talking about accounts payable, because just one check that was paid out after year end could make accounts payable be way higher than last year, whereas if you paid out all of your checks, cut them just before year end, accounts payable is gonna be way lower. So it's really just a matter of timing what that number is.
And then somebody else.
Yeah.
I have one last question.
Sure.
Last year, I wasn't involved in the audit, but I read the audit after I got back on the board. There was a complaint that we had not properly put the pilot payments in an account by themselves. Is that the right term, Tracy?
Yeah,
And that was done, so they're handled properly this past year, and you understand what I mean?
yes, absolutely, yeah. I did look over that stuff from last year, and pretty much what they were saying is that they recommended putting it in a separate bank account. Not only does it make it easier to track because it's not getting mixed in with general IDA activity, but from our standpoint as an auditor too, it makes it easier to look at all of the transactions too, seeing the net dollars coming in along with the net dollars coming out. Like, as you can see on page 10, under the first couple of items from cash flow from operating activities, the cash coming in and the cash coming out is generally pretty close to netting to zero. But when it doesn't, we'll have that pilot payments payable on the face of the statements, which was the 19,000 last year and only $957 this year.
So Tracy and Mike corrected what the complaint was before, and they're done properly now.
Yes.
Okay.
They have to be put in an escrow account, or how do you, just as long as
It's
it's
just a special account, I think.
Okay.
Just a regular
Just-
checking
yeah.
account that's not commingled with our operational funds.
Makes sense.
The other thing we talked about, it's the same payment for the length of the. I mean, there's one schedule for the length of the pilot.
Mm-hmm.
So we should probably get a report of that,
Hmm.
and then we can make sure we make those payments every year.
For some pilots, the numbers will change from year to year because they float with the actual assessment and the tax.
Yeah, I'm sorry. This, right.
Yeah.
But at least we should have a schedule.
We do.
Yeah.
It's part of our internal documentation for every agreement, as it outlines year by year when it starts. Taxing municipalities, jurisdictions, so
But if you can give us a copy of that, then we can.
it's in every single agreement. So we have all of them.
So you just want a copy of the schedules?
Yeah. You don't mind.
I think you've already answered this one before, but on page 9, the contract expenses went from 150 to 185. That was the $38,000 that went to MRB. Is that not correct?
Well, those costs made up most of the increase in total expenses, yes.
And the professional fees that went down, how did our professional fees go down?
Well, professional fees can include a number of things such as legal services,
Yeah.
our services, and then any other, as it states, professional services that the IDA may need. So it just looks like there was a small increase from last year.
in the professional service, there was a small decrease.
Decrease.
Yeah,
Decrease,
Yeah,
So the audit, I think, is gonna be less for 2025 than it was last year. And I think you were just using a lot of legal services in 2024.
You're making a point of that.
Well, we had a lot of,
With the
land
sewer,
sale
yeah.
projects, yeah, there was a lot of activity.
I had one minor question or comment on page 15, section 5. There's this kind of lingering 2016 pass-through payment. Is 9 years, is that typical or is this an outlier? And is there a point at which we just write that off and it's administratively closed if they don't have their paperwork submitted?
Well, number 5,
Page 15, section 5, yeah.
Yeah.
It was a $10,000 payment, I think, waiting on, it's a pass-through payment waiting on delinquent paperwork.
Michael, do you wanna speak to that? It's a Clarity Connect, I think. The 10,000.
The balance has been the same for the last couple of years.
Oh, yeah, Tracy, you have to speak to this because this is
Yeah.
started during your tenure.
Yeah,
oh my.
so,
She was ready, she just wanted to see if you would grant.
Oh, I remember this and it's on our docket this year to.
I'm actually
get rid
gonna
of
talk about it at the regular board meeting too.
Mhm.
Because we talked about taking care of it in January and then it hasn't quite gotten out the door yet, so it is still there, even though it doesn't show up on the balance sheet. So when we did, the CCIDA supported the Clarity Connect project in southern Cayuga to put in wireless broadband network.
And
And
when was this?
2014,
Yeah.
2013, 2015, some,
This is
about 10 years
over
ago.
10+
And,
years.
A number of towns and villages supported that effort with payments of whatever amount they could come up with for specific purposes. And CCIDA acted as a go-between for that, so we collected all the money from the towns and villages. And then Clarity Connect had to submit disbursement requests to show that they spent that money and that they spent it for the correct purposes. And so we did all that reconciliation, and then at the end of it, there's this $10,000 from the town of Ledyard that was specific to some, I think, poles, like telephone poles or something, that Clarity Connect never came to ask for. And over the years, we touched base with them a few times, and they've just never submitted a disbursement for it. So at this point, I think the move is to send it back to Ledyard and just give it back to them, because it's been 10 years and
Yeah, that's,
it's not technically written in the contract, like how long they have, but I feel like there's a statute of limitations on this. So, Michael and I earlier this year were talking about how this year we need to get that money back to them and just
Get it off the balance sheet, yes.
Mark will enjoy that.
We talk about this about 3 times a year.
yeah, that'll be a nice little windfall.
We did get in the neighborhood of $400,000 from the water and sewer. Where does that show in this?
It offsets the loss of the transfer of the sewer line.
Oh, okay, that went off the loss of, okay.
I think. I assume.
That was-
yeah,
Stop.
in 2024, yeah.
I was very confused about all of these transactions, so they actually helped us a lot clean up the sewer transactions because it got a little messy there. So thank you for not creating a finding out of that.
Well, no, yeah, there was not a need to, like, you guys were very helpful and like Greg said, first years never go this well, and to be honest, I work on, this year, I've worked on 10 public authorities, and this was my favorite one. It went so smooth, no issues, everyone responded to what we needed quickly.
Careful,
and-
Herbie will ask for a discount.
That's awful good.
No, that's great, that's very nice.
I'd like to say, when your auditor is your friend, things just go better. You keep your auditor happy.
Yeah.
Happy auditor, happy life.
Yeah.
This is not quite the same way.
Yeah.
No, Oh, that's great, fabulous, really appreciate it.
Is there a motion for the audit committee to adjourn?
I move
We
we,
have to move to accept the audit.
I think we recommend that to the full board.
Yes.
And I think you and I are ready to do that.
Sure. Very good. Move adjourn.
All right, we'll see you back online in 20 minutes, Don.
Sounds good. See you then.
Thanks.
Bye.